Hey, it's Joe again. We've got another video here. This one is about buying properties for cash, and either cash or getting a loan in your name to buy a property. How to analyze a deal to do it that way. Now, there's lots of ways to do this. If you want to buy foreclosure properties, REOs, real estate owned from the bank, you're going to have either cash or you're going to have to be able to be pre-qualified for a loan. If you go make an offer to a bank, they're going to want to make sure that you have funds, that you're going to be able to purchase this property just like you say. So you're going to have to show proof of funds. Now, you can get proof of funds from folks like me. I do transactional financing, and you can get that from me. I only do it for my mentor students because I can't do it for everyone, but I do it for my mentor students, and we can show proof of funds. But most of the time, you're not going to need proof of funds because you're going to have, if you're going to do this kind of transaction, you're going to have cash or you're going to have somebody in place to buy the property. Now, if you don't have somebody in place to buy the property already, if you've got to do some work to it, if you've got to put some money into it, then you're going to need to show proof of funds, close the deal, then turn around and sell it. Now, there's some tricks about selling it right now because it's hard to get lenders to loan for new buyers on properties that have just been flipped, especially if you're raising the price on those properties. So be careful how you do those types of deals. I've been buying a lot of foreclosure properties, but I've been putting tenants in them, and then I keep some of them for my portfolio, or I sell them to other investors. And that's another video that I've created on that. If you're interested, go to getmoreclients.com/high cash flow houses. I'll put it here up on the bottom of the screen so you can go there if you like. It's another video that talks about, it actually addresses the issue to investors if you want to buy properties from me personally and how I do it. And you can do it the same way. You can sell to investors the exact same way that I'm doing it. I'm buying most of these properties, but you could do it, if you do it some of the ways I do it show in the video, you could actually get the investor to pay for the property. It just becomes more of a pain in the neck. And I think there are better ways to work with investors than doing it that particular way. But it's the way I'm doing it right now because I have capital to invest. I've got money from my IRA to invest, and I'm buying a lot of properties. I want to fill my portfolio with high return investment properties, which these properties are. So anyway, buying bank-owned properties it can be very profitable if you know what you're looking for. You better make sure that you get a good deal on them and that they're going to make sense for the investor. I'm going to talk about what's going to make sense for an investor in the upcoming videos when we talk about exit strategies. But right now, let's just talk about the ways that you can buy cash deals. Foreclosed, bank-owned, or foreclosure properties where you're going to need cash. Short sales, you're going to always need cash or a loan when you do short sales, or you're going to need an investor. And I wouldn't count on investors. Most of the people that I know that are going out and finding short sales and putting together these short sale deals with an agreement from their investor saying, oh yeah, I'll buy it if it makes sense to me. They may have 4 or 5 of these investors lined up ready to buy these properties, and then when they find one, they go through the whole process of dealing with the bank and getting them to finally approve the short sale. They go to their investors and none of their investors want it. And that could be partially because the investors was just full of it, or it could be that the deal that they put together didn't make sense, or didn't make sense for their specific investor. So if you're going to sell to investors, you want to make sure that the deal makes sense for you personally to keep or to flip. And if it makes sense for you personally, then it's more likely that it's going to make sense for them. If you're not able to do it, then it doesn't make sense for you. But if you're able to do it and it makes sense for you personally, then it's going to make sense in all likelihood for another buyer. Now, that's not written in stone because right now, if you're just beginning in this process, you don't always know what a good deal is. And that's what we're trying to get to through this series of videos that we've got going here. The next one is doing tax liens. Tax liens are also require cash. And then both cash and terms, you can do things like rehab projects. Rehab projects almost always require some capital. Rental properties, long-term, short-term rental properties. And then you can get your money from either banks, from your own capital, from your IRA, from your home equity line, from private individuals. These are all places you can find these deals. Now, in my opinion, it makes more sense And you're going to be in more control of your business if you learn how to do zero down structures than if you do cash deals. By doing cash deals, you're putting yourself at somebody else's mercy. And I've seen too many people go out there and put their heart and soul and their blood into putting deals together for their investors, and their investors never follow through with those purchases. And it just creates heartache and discouragement, and people get out of the business because they're not making any money. So if you want to make money, if you want to be in control of the transaction, if you don't want to have to answer to a lender, if you don't want to have to answer to that underwriter who's probably only making $40,000 a year and doesn't really know what he's doing, he doesn't understand your business, doesn't understand real estate investing, if you want to avoid being under their thumb, then learn how to do it with zero down structures. When you do that, you start bringing cash flow in, and eventually you're going to raise enough capital where you can start doing cash deals yourself, which is exactly the situation that I've been able to get into. So all these types of deals make sense depending on the deal, on the position that you're in, and what you're trying to accomplish long term. Hope that helps.